Hi, I'm Michael Nurok and welcome to the Price Flip Trading Strategy video. In this video, we'll cover how to detect when the market is likely to reverse. Okay, when is it going to start going up after a downward move, or when is it going to start going down after an upward move? As you can imagine, this is a very important skill to know, and it's really quite easy. Now, there are many ways to be able to uh, do this. However, price flip is very simple but very powerful. It's a candlestick technique, and over the session we'll cover all the details, and we'll go over to some live charts and see how it plays out in the marketplace. Now, if you haven't seen the trend catcher videos yet, make sure that you do. It's wonderful for getting into trades and following trends for as long as possible. In the future sessions, we'll be covering macro levels, which are institutional support and resistance levels. Extremely vital to know no matter what strategy you're using. And beyond that, we'll be covering some tips, tricks, and techniques of trading the Forex market. And finally, I'll be bringing it all together. And hopefully, after this series of videos, you'll be able to go forward with confidence of being able to trade successfully in the Forex market. Now, if you haven't as yet, or even if you have, if you get anything from this video, please feel free to write a comment below this video. More than appreciate it. Or any feedback or any questions you have, I will get back to you. And of course, you'll go into the running to win a 24-month premium membership, which we have a few of that we will be announcing shortly. Okay, oh, and finally, make sure you download the free guide. It's a PDF special report after watching this video because it has even more information than we cover in this video. Okay, so what we're covering today will be essentially an introduction on how the market flips direction, how the market moves. We'll cover a system summary, the buy rules of taking a price flip and the steps involved when entering a buy trade using the price flip strategy, sell rules, and sell steps. Okay, so firstly, an introduction. Price moves in a zigzag motion. It always has been this way. It always will be. The price never moves in a straight line. So it's really important to know, as I mentioned before, to be able to either get into trades or get out of trades when you can detect that the market is about to change direction. So price flip is a price action system that identifies critical reversal points. The strategy is based on the core head fake principle that highlights potential price reversals after consecutive upward or consecutive downward bars, providing strong signs of possible fatigue or exhaustion in the market. The system can generate great opportunities for you, but only if you stay disciplined and, as with all trading strategies, stick to the rules. Now, how does the market move? Well, it moves in a zigzag pattern. You know, you'll see it go up, down, up, down. It's all over the place. Sometimes there's no logic to it unless you know what to look for. So trend following is one kind of strategy. Price flip is more of, although it can provide you with some great pip trades of 50, 100, 200 pips or more, where it can really get you involved in a trade at the point where the high where the market starts falling, or the low where the market starts rising. But again, it also can be used to get you out of trades. It can be used for long-term trading, but more likely as a scalping technique. I use it on the 1 hour and the 4 hour time frames, and I don't necessarily suggest you use it on any other time frames, although you can use it on the daily as well. We'll take a look at some examples of that in the live trades that we look at. So here you can see the green lines, which represent areas of resistance, and the red representing areas of support. Okay, now I point this out because price flip can provide you with good, successful, profitable trades at any time, but you have a higher likelihood of the trade succeeding if you enter a price flip trade when in a line with levels of resistance or levels of support. Okay, and there's a number of ways of being able to identify them. They can be recent support and resistance, or like the macro levels, more longer term institutional levels of support and resistance. And these are really the times where you want to look seriously at a price flip trade. So price flip is essentially a candlestick bar pattern that identifies critical market reversal points. It highlights momentum exhaustion levels and the likelihood of price changing direction in the immediate or very near future. So a buy or long price flip is a pattern of two consecutive down close bars where the difference between the low and the close of the last bar is greater than the difference of the low and close of its preceding bar. And I'll bring up a couple of examples in a moment. And conversely, a sell or short price flip is a pattern of two consecutive up close bars where the difference between the high and close of the last bar is greater than the difference of the high and close of its preceding bar. So let's have a quick look. Here we see a price flip occur for a sell, sell, sell. All of these were profitable. A cluster buy here, buys here and here. This one didn't succeed, but all of these did. Sell, sell, and of course buys as well. So in this case, you can see that they come up all the time. This is on the 1 hour time frame. And out of 11 trades, there were 8 winners, 1 break even, and a total of 264 pips in 36 hours. And we'll go to the charts in a moment so you can see that how it happens as a natural occurrence in the marketplace. So the following displays the basic formation of a valid price flip to occur. So here we see two consecutive downward moves. We see the difference between the low and the close is bigger. So in other words, this bottom wick is bigger than this bottom wick. Okay, and that provided us an indication of a possible upward trend, which or an upward move, which occurred in this case. For a sell, we see at least two consecutive bars, upward bars, where the signal bar that provides the price flip, the wick, okay, the upper wick in this case, and that's the difference between the high and the close, okay, is bigger than the wick of the preceding bar. Okay, so you can have 2 bars, 3 bars, 5 bars, 10 bars that are all upward in nature, okay, where the high is higher than the close is higher than the open. Once we get a big wick, if it is greater than the preceding wick, that's a price flip. And same with the sells. Of course, we can have 2, 3, 5, 10 downward bar moves. When we get a big wick that's greater than the preceding wick, as long as the bars are both downward, that's an indication of a buy price flip. Very, very easy. And again, it's price action. It doesn't rely on lagging indicators, which is why often you'll get into the trade quicker on a price flip than, for example, a trend catcher trade. Okay, I mean they both have their pros and cons, but price flip is particularly good for picking those lows, picking those highs, and scalping some pips out of the market. As I shared before, you can make some really good pips, but essentially you want to be able to get in and and get out with your profits. So rules, buy rules first. There must be at least 2 consecutive downward candles. Again, it can be 3, 5, 10. Excuse me. The difference between the low and close of the current candle, the bottom wick, must be greater than the difference of the low and close, again, the bottom wick of the preceding candle. And the difference between the low and close of the current candle, which provides that price flip signal, okay, the bottom wick, must be at least 20% of the total size of the current candle from high to low. Now, typically, I'll look for wicks which represent 25% or higher of the total candle size, but 20% is a good guideline for a minimum of what you're looking for. Enter the trade at the open of the new candle following the candle that provided the setup signal. So if you're on the 1 hour time frame, which is the most common or popular way that the strategy is used, well, the 1 hour and the 4 hour, but I think the 1 hour is probably the most popular. You want to enter at the open of the new candle because anything can happen in even 5 or 10 seconds. So if you're waiting for that candle to close to give you that price flip indication, wait for it to close. Okay, don't preempt it. And the stop loss is placed a few pips below the low of the signal candle. Take profit is set to at least 1-to-1 risk reward ratio. You can go higher, 1-to-2, 1-to-3, or you can trail it on the basis of lock-in profits points. So let's have a closer look. Okay, we see price move down. No price flip was given here. A little bit of a move up, consolidation. Here we see two consecutive downward moves where the close was lower than the open. And on this candle, the close was lower than the open. And this wick, the bottom wick, the difference of the low and close, in other words, is greater than the preceding bottom wick. Okay, so entry at the open of the new candle, which is this blue candle here. In this case, the bottom wick is greater than the preceding wick and over 20% of the total candle size. And in fact, in this case, it's probably over 50%. And that gives you an indication for the strength of for the probable flip in direction as well. And of course, at least two consecutive downward candles. Stop loss is placed just below the signal candle low. So give it a little bit of room to move, 5 or 10 pips at least. It depends on how much your total stop is. In this case, it's looking at around 20 or 30 pips. And then you can set your take profit to either 1-to-1, which it easily hit in the same bar, 1-to-2 take profit reward or risk to reward ratio, which also was hit on that first bar. You will actually notice that on these price flips, if it moves the way you expect it to move, it's going to move really quickly. Okay, so if it just meanders along here, you can pretty much avoid that trade. I mean, it may still go up, but it becomes more of a coin toss at that stage. And sorry for the audio alert. There's my trade alert occurring again. Take profit of 1-to-3 was hit here. Take profit 1-to-4, and this one actually made a profit of 1-to-8. Okay, so a risk of let's say that was 20 pips and 160 pips as far as the profit goes or reward. So let's have a little closer look at it. Buy steps. Number one, there must be at least two consecutive downward candles, which there is in this case. Okay, at least two downward candles. Very, very simple. Again, it doesn't matter if you've got more than two. In fact, that can be even better, but a minimum of two. Okay, number two, the difference between the low and close of the current candle, the bottom wick, must be greater than the difference of the low and close bottom wick of the preceding bar. So again, we see the bottom wick is greater than the preceding bottom wick. This is the preceding one here. So a smaller bottom wick. This has got the bigger one. Okay, and the bigger it is, the better. The more percentage of the bar it is, the better. Which brings me to step three, the difference between the low and close of the current candle, the bottom wick, must be at least 20% of the total size of the current candle. Okay, high to low. That's the total size from high to low or low to high, however you want to say it. But this wick is at least 20% of the total candle size. So again, in this case, it's more likely 65%, I guess. It's a lot. It's reversed on itself. It's pretty easy to see. And step 4, enter the trade at the open of the new candle, which is this point here, following the candle that provided the setup, being this candle here. Step 5, stop loss is placed a few pips below the low of the signal candle. Again, the low of the signal candle being here. We place a stop loss below. And step 6, take profit is set to at least 1-to-1 risk reward ratio. You can set hard targets on this, or you can lock in profits as you go. Okay, there's a number of different trailing methodologies you can use. You can also use, specific resistance levels that are, recent in the marketplace. So you want to be able to lock in profits before the price gets to those resistance levels. So sell rules are totally the opposite. There must be at least 2 consecutive upward candles. The difference between the high and lows of the current candle top wick must be greater, must be greater than the difference of the high and close top wick of the preceding candle. The difference between the high and close of the current candle top wick must be at least 20% of the total size of the current candle, low to high. Enter the trade at the open of the new candle following the candle that provided the signal setup. Stop loss is placed a few pips above the high of the signal candle, and take profit is set to at least 1-to-1 risk reward ratio. So looking at the sell rules, we've got a price flip occurring here with the with the top wick, or the difference between the high and the close, greater than the preceding wick. And in fact, in this case, we see a cluster price flip, because this candle here is also a price flip in its own right, because it also is in a sequence of 2 consecutive upward bars or candles, and its wick is greater than the preceding wick, which in this case is virtually nothing. Both are at least 20% of the total size of the bar. Okay, and then we get this nice big fall down. Take profit 1-to-2. Risk reward ratio 1-to-4 here, 1-to-8. This one actually generated a 1-to-10 risk reward ratio. So in other words, if you're risking $10 and your profit ends up being 10 times higher or more than the stop, because of course your stop is here, your entry is here, so tiny little stop loss, you're risking $10 to make $100, which is great. That's the way you want to trade. You always want to be able to get in and make as much from your winners as possible. So having a little closer look at it, once again, there must be at least 2 consecutive upward candles. In this case, 2 signals were produced. That happens quite often. You'll see in the marketplace. Number 2, the difference between the high and close of the current candle top wick must be greater than the difference of the high and close top wick of the preceding candle. The difference between the high and close of the current candle, the top wick in other words, must be at least 20% of the total size. Again, in this case, it's more likely, well, it's over 50% by the looks of it, 55% perhaps. Number 4, enter the trade at the open of the new candle following the candle that provided the signal setup. Okay, over here. If you got in on this trade, then you would have just survived it if you had your stop here. And with these price flips, you'll notice that particularly say on the 1 hour time frame, your stops are typically really small. They're usually no more than 20 pips. In some cases, you'll get in a trade for 10 pips, and 10 pips is just nothing. Even 20 pips is a small stop loss. Of course, it depends on the lot size that you use. But that's what trading is all about. You want to get in and risk little and win big. And price flip is an ideal little strategy for that, particularly on those quick moving scalps. Again, if it's going to move in your direction, it's going to move very, very quickly after the signal was provided. Okay, if it lasts more than say 3 candles and it hasn't gone anywhere, either tighten your stops dramatically or close out of the trade. But if you are a little bit in profit, then maybe move it to break even, or as I mentioned before, tighten your stops, because you really want a quick moving trade and get into profit as quickly as possible. Then you can move your stops to break even at the very least, or lock in a few pips. And from that point on, it's a risk-free, stress-free trade. So step 5, stop loss is placed a few pips above the high of the signal, or the signal candle high. And step 6, take profit is set to at least 1-to-1 risk reward ratio. Okay, so 1-to-1 is here, entry here, stop here, 1-to-1, bang, we got that, within the hour. 1-to-2, 1-to-3, 4, 5, 6, 7, 8, 9, and 10. Okay, and that concludes this part of the price flip trading strategy. Hang around, because we're just going to take a look at the charts now, and take a look at some live examples or live trades that are occurring in the marketplace right now, and look back at some examples and how to apply the price flip trading strategy in the marketplace. Alrighty, we're on the price flip charts. I'm going to go through a bunch of different symbols. Now, it's a strategy that can be used on any symbol. I'm on the 1 hour time frame. I'm going to stick with that because that's where the strategy was developed, but you can use it on the 4 hour time frames as well. I've even used it on the 30-minute and the 15-minute, but word of warning, you really want to pick your levels at where you get in on these trades. So, just to recap, when I'm wanting to catch a trend and follow that trend, I'll use trend catcher. When I'm looking at catching a reversal as price, reaches or a high, or plummets down to a low, that's where I want to get in. So here we are in the euro on the 1 hour. Right now, I'd be looking at the possibility of a spike down and a reversal if that were to occur. That could be a very good price flip to get into because it is at this extreme low. Now here we've got a nice price flip that formed, a retracement on itself. So we had 3 downward candles followed by this price flip candle. And as I shared with you earlier, if a price flip's going to go, it's going to go really quickly. In this case, 37 pips. So obviously you would have more than likely closed out at less than that if you were locking in profits as you went. And I'll just take it off auto scroll so we can take a look back. So where are we? This one here was a loser. This one here may have been a break even. Over here we get a nice one. We almost get a double price slip over here. So that one almost got stopped out, but what are we talking about? It went 16 pips against us. So normally I'd be looking at 20 to 30 pips for the stop, and reached a high of around 40 pips, 42 pips. Now, when you come across contrary price flips to the other side, that's the time to be wary, and you could have taken this one down as well, which would have been a small winner, or at the very least a break even. Same with this one over here. Had you let this one run, it would have been a nice 40 pip trade. This one here is a nice one. So it reached a level of about 68 pips and never really went against us, more than a few pips. So if you had placed your stop, a few pips above the high, say at least, well, see, you could have got in on this one for less than 10 pips, 7 pips. I would have gone in higher, at least 15, 20 pips. And then, we had a nice fall down to 65, so at least a 3-to-1. This one over here, okay, this one failed. This one was a nice one, and we can see that one. Okay, it went against us 14 pips, but again, we would have placed our stop above the high of the price flip candle, and it reached down 140, 146 pips before we got a contrary price slip to the upside. Here again, we got another little price slip to push it down. Nice one over here. Okay, this one failed. So if you were on this one, this was a nice one that went down, only went against us, 5 pips, never threatened at all. Came down around 26 pips, 25, 26 pips. And this one over here, oh, reached a high of 75, 80 pips or 75 pips thereabouts. You would have tightened profits, I would hope, when you saw this contrary candle. So you have the choice. You can take the opposite direction, or you can tighten your stops at that point. And in this case, it went a few pips against us and then shot back up. Over here, we see a double price slip occurring. You might have got taken out with this one. This one, however, did win, and it happens. That's trading. Another win over here. This one probably a bit of a loss. We get a nice one over here. You can see the consecutive trades moving up. Okay, so there's a cluster over here. Depending on where you placed your stop, if you, well, you would have been wiped out by this spike over here. But again, that's what it's all about. But then you would have come back in. If you're consistent, with the strategy and you're discerning with the trades that you take, there's another 50 pips on that one. Over here, we got a nice run upward. And you may not have taken these ones, but tightened your stop. If you had taken any of these three, you'd be in the money for quite a few pips, 70, 80 pips, thereabouts. So as you can see, this one just missed out. If this had closed, if the close had closed above the open, so a couple of pips, it would have been a beautiful one there as well. So let's move on to the pound. And again, I'm not cherry picking any of these trades. This is live. We're on broker date of May 18. We can see a nice little move up here that would have made a few pips or at least broken even. Here we got a nice run down, and if we could still be in that trade if we hadn't got locked out. Okay, 80 pips, but more than likely 50 pips. Take it off auto scroll again. A little break even trade over here. Possibly we would have hung in on this one and saw this trade go up, but possibly. I mean, how far did it go against us even at this point? 30 pips, we might have got knocked out. But if we were in the trade from this point, we may still have been in the game, because if you had taken this flip, it only went against you about 14 pips and then rose up 170 odd pips. Here's a nice one over here, never went against us. So you're going to get good trades. You're going to get more challenging trades. There's about 100 pips on that one, a little bit of a move up there. So you can see that you do get quite a few winners, and the winners do tend to go well. Here's a nice one there, 40, 45 pips. You probably got knocked out of that one. This one over here would have just survived, I would say. Let's have a look. So it never went against you more than 10 pips, right? So, if you stick to at least 15 pips as a minimum on your stop, then you would have easily survived that. Well, not easily, but you would have been a few pips close to getting knocked out, but still safe. And 15 pips is only 15 pips. And then a profit of 80 pips. So what's that? 5 to 1. Here we got a nice little move, not a big move, but a nice one nevertheless. And let's move on to the Aussie. Now remember, if you have any questions, put them, write them down below this video, and I'll answer them. In a couple of sessions, I'll be holding a putting it all together video that's going to answer a bunch of questions and put all of these strategies together: trend catcher, price flip, and of course macro levels, which we haven't covered yet. So we've got a nice little winner over here. This one was a loss. Let's just scroll back. Not really much to talk about over here. This is a nice one. So you can see, just like anything, it's 95 pips. I mean, that's great. And you can see that in a lot of the cases, when they go well, they really go well. Never went more than 3 pips against us. And, for a potential 100 pip move. Here's a nice one as well, up around 55 pips. So again, we get in this case, 3 consecutive downward bars. We get a retracement on that bar where the bottom wick is greater than the preceding wick, and it's easily more than 20% of the total candle size. Just like this one over here, we get 2 consecutive upward moving candles with the price slip candle giving a big wick, big top wick in this case, and representing again about 60%. So we only need to get at least 20. I like to work on 25, but 20 is good enough. Over here, we've got a nice move up. Here again, so you can see once again that we've got some good moves. Here's a great one over here. It was a really small wick, but nevertheless, I'll take it. And that was just before an announcement, I believe, on interest rates, or was it PMI? I'm not sure. I don't really follow the news. I'm a technical trader, but once again, 250 pips here, and it went against us, 16, 17 pips. So fantastic risk to reward ratios. Kiwi, okay, well, there's an obvious one. The first one we see, bang, 48 pips, never went against us more than a couple of pips. Oh, nice one over here. You can see 2 consecutive candles, at least 2 consecutive candles up, never went against us more than 3 or 4 pips, and 90 pips to the downside, which is money in the bank. Let's just bring this down a little bit. Here we can see a little cluster, and bang, a move up. Sometimes it doesn't take off on that first price flip. When you get a cluster, uh, it often means a good move up. So 55, 57 pips, nice move up here. And so we go. All right, moving right along to the Aussie Kiwi. We can see this one was recent, would have been taken out, but it's looking like going now. Oh, and there we go. This one didn't take off immediately, but hey, it doesn't look like it went against us more than a few pips. 7 pips, and it's already 11, 12 pips and looking very nice and bullish. Over here we get a nice move down, and here we get a nice move up. So a very nice trading system for scalping the markets, and in many cases for bringing in a lot of pips. There's another 30, 40 pips. Ooh, here's a good one. Now this one did go against us, but not by a lot. 15 pips, and really we would have been, quite honestly, placing our stop at around that 20 pip level above the high of the price of the candle. Once again, a nice move down, 80 pips in a matter of 1, 2, 3, 4, 5, 6, 7, about 12 hours. Here we go. This one preceding that went very nicely as well. Now, this one was a loser unless you moved to break even pretty early in the piece, but you probably wouldn't have been in this one because the one before that was a nice move down, as you can see here. Never again went against us at the extreme level of highs. It's sitting up there at the top of the chart, and 180 pips for risking no more than 15, 20 pips, and never went more against us more than 3 or 4 pips. Okay, dollar CAD, we get a nice move down on this one. Loser here, loser here, loser here. This one was a nice one. Went against us a little bit, but still, let's have a quick look. 12 pips against us, 60 pips in our favor. That one just missed out on the price flip too, just there. I'm looking at it now on that rally up. Here we get a nice move down. 70, 75, 80 pips. Of course, the full length of it was 116 pips, but obviously we would have been taken out somewhere along there and then got back into the party, on this price flip here, potentially. Break even, little move up, nice little, well, nice big move actually along this one. If we got into this one, it did go against us a little bit. Nevertheless, a very strong move up. And, that's what the whole idea is about price flip. And when you can use it with trading with the trend, for example, so you get a retracement while it's in a trend, then you look for a price flip, and that gets you back into the trade. Um, and you'll soon see as well with macro levels, same thing. Okay, so we've got a price flip on the Aussie CAD. I don't actually have that on this selection here, but alerts coming up all the time, and you know, I'm confident that you'll have more trades than you know what to do with. 74 pips, beautiful trade, never went against us more than 4 or 5 pips. And this one here, the nice thing about price flip as well is you're not necessarily committed in any one direction. 45 pips. So I hope you can see by now, just by, you know, randomly going through these trades. Nice one here, and then a nice one back up here. And again, not cherry picking trades, just going live and taking a look at what the market is providing, because at the end of the day, it's not up to me, you, or anyone else to determine what the market does. The market does what the market wants to do. It's up to us to interpret what the market's doing and capitalize on it. Little 30 pip trade over here, not a big one, but a nice one. I mean, a lot of people would be really happy with a 30 pip um, trade. But the type of strategies that I typically like are the ones that are making good pips. 90, 95 pips here. I mean, you probably would have tightened your stop when you saw this big retracement candle, even though it wasn't a price flip. Nevertheless, a warning sign over here went against us 18 pips. I think we would have just survived that if we had placed it at 20 pips stop and about 95 pips to the upside. A couple of losers here on the down, but once again, you very well could possibly still have been in this trade here. Only when it's 6, 7 pips against us, and bang, 100, 104 pips, in our favor. This one as well was a nice move up. So just to wrap it up, Euro Yen, same. You can see the same kind of patterns forming. They're very easy to detect. Obviously, it's a lot easier when you have the actual indicator, by your side, to be able to give you an alert, and you can take a look at it. And if it's high on the chart and you're getting a price slip alert, then it's a good indication that price is going to fall. Price is going to have a correction. Or if it's low on the chart, similarly, then there's a good chance that you're going to see an upward move. Absolutely beautiful one over here. Went against us 21 pips, but I should add, as a little bit of a disclaimer, pips are not pips, they're not the same on all charts. We're on the yen here, the pound yen, so all the yen crosses are typically at least 1.5 times more than what you would use, or to double what you would use then on, say, a euro. So in simplistic terms, and this may sound silly, if you're looking at, say, an inch of a 1 hour time frame on the euro, it might be, let's say that's 20 pips. If you're looking at one of the yen crosses, that same inch is like 40 pips. So again, super simplistic, but it just means that, or I mean that you need to give it a little bit more room on the yen crosses. But again, we're really only talking in this case here, you know, 30 pips instead of 20, 35 pips thereabouts, and that would provide you with a bit more safety. Alrighty, so I hope you've enjoyed this video on price flip. It's a wonderful strategy. Again, make sure you leave a comment below. You could win a 24-month premium membership premium members do get all our indicators for free. It's the first time we've offered this to the public. And of course, they provide you with alerts and push notifications straight to your mobile device. So once again, you do have the PDF special report that you can download for free. It's got more information than what I've covered today in some parts, a bit more detail. Again, any questions, comments, feedback, love to hear about it. And certainly would love to see you join our membership and copy our signals, as well as take advantage of the indicators that we provide as special bonuses. We're also providing 12 months free to celebrate our fourth year anniversary of published signals. So thank you very much once again. Thanks for watching. Until next time, good trading, live well, and I'll see you soon.